All right, today we are diving deep into NIO's grand strategy. This isn't just about building cars. It's a multi-layered plan to become a true national champion in one of the most competitive markets on the planet.
That quote really hits the nail on the head. Success in the Chinese EV space is this incredibly complex game. It's about infrastructure, it's about timing, and maybe most importantly, it's about getting the right kind of state endorsement. So what happens when a company starts getting all of those things right all at once? Well, that's exactly what we're going to unpack.
It all starts right here. This is the bedrock of their whole plan, state endorsement. You have to remember, in a state-guided economy, a signal from official media can be way more powerful and move markets way faster than any financial report.
And look, this wasn't just some quick mention on the nightly news. CCTV, the state media, embedded their crew right on the F2 factory floor. That kind of up-close and personal access, it's not handed out lightly. It is a very deliberate, very public signal to the entire market that NIO is a company you need to be paying attention to. This kind of coverage basically anoints them with a special status, a national champion. It's not just a fancy title. It's a declaration that this company is a leader, that it's essential to the country's technological future. And that status, well, it has real, tangible power.
And that power, it triggers a cascade of benefits. It's like a domino effect that touches every single part of the business, from the person buying the car to the regulators in Beijing. Let's take a look at how this chain reaction actually plays out.
So here's the crucial part, how this translates into huge real-world advantages. For a consumer in a really crowded market, it creates instant trust. For the brand itself, it's a kind of awareness boost that you just can't buy. And then behind the scenes, it means things like faster regulatory approvals and much better access to capital. It just reinforces this idea that NIO is essential.
Okay, so that's the strategic foundation, the high-level endorsement. But you might be wondering, does it actually translate into sales? Well, let's get into the numbers, because this is where the strategy really proves its worth.
First up, we've got the entry-level Firefly brand. We're talking over 40,000 deliveries just since last April. That is a really solid start. It proves there's strong, validated demand at the most accessible end of their market.
But honestly, the main event here is ENVO, their mass market volume player. It just blasted past the 100,000 delivery mark, and it hit that milestone in record time for its segment. This is huge. It's historic. But believe it or not, this is just the warm-up act.
Because this is the trajectory we're talking about. The projection for 2026 is that ENVO could deliver 200,000 cars in that single year. I mean, think about that. That means doubling its entire lifetime deliveries in just 12 months. That is just explosive growth.
But how do you possibly achieve that kind of growth without your own brands just cannibalizing each other? Well, this brings us to the next pillar of their strategy, a truly surgical and, frankly, intelligent product strategy.
And this just illustrates the plan perfectly. I mean, look at how clean and deliberate this separation is. The premium NIO brand, it owns the space above 298,000 RMB. Then ENVO comes in to dominate the mass market volume segment right below that, and Firefly captures the entry level. There are no blurry lines here. Each brand has its own clear battlefield.
And the key, the absolute key to unlocking that 200,000 unit projection for ENVO is this upcoming vehicle. It's expected to be called the L80, and its positioning is, well, it's a genius move. Here's why.
So why is it so smart? Well, first, it's a large SUV, and it's hitting the segment where consumer demand is absolutely surging right now. Second, it is aggressively priced under 250,000 RMB. That's a massive value proposition. And third, and this is key, it slots in perfectly below the premium NIO brand's entry point. This lets it capture huge volume without eating into their high-margin sales. Now, this aggressive pricing and this really clear segmentation, it's only possible because of the final pillar of their strategy. This is the competitive moat that underpins the entire business model, and that is battery as a service.
Here's how BaaS works for you, the customer. It's pretty straightforward. You choose your car, then you opt into the BaaS program. Right away, this cuts about 70 to 80,000 RMB right off the sticker price, which is a huge psychological win that makes the car so much more attainable. Then, you just pay a monthly fee for seamless access to the entire swap network.
Of course, to handle this coming surge of new ENVO and Firefly cars, the network itself has to scale up, And that's exactly why they're rolling out these 5th-generation swap stations. They're faster, they hold more batteries, and they have a smaller footprint, meaning they are purpose-built to handle this new, massive volume.
But you might be asking, doesn't sharing the crown jewel, the swap network, kind of dilute the premium NIO brand? And that's a fair question. This is how they manage that risk. The convenience of the technology, that's shared with everyone. But the premium experience, the concierge services, the beautiful showrooms, priority access to new software, that stays exclusive to NIO owners.
So, let's pull all of these threads together. What does it really look like when state endorsement, explosive growth, surgical product planning, and a powerful infrastructure moat all converge at the same time?
Well, you get these 4 pillars. You have state validation providing the trust. You have the sub-brands providing incredible momentum. You've got a precise product strategy to capture growth without any self-sabotage. And the whole thing is held together by the BaaS network, which creates the sticky, recurring revenue ecosystem.
Ultimately, what we are witnessing right now is the validation of a very expensive, very long-term plan. All those years of massive spending on R&D and infrastructure are finally paying off. It's transitioning NIO from a niche startup into a true scaled market leader with a very clear path to future dominance.
Which brings us to a final, really fascinating question to think about. By separating its premium brand from its shared technology, NIO is essentially running 2 very different businesses at the same time. So what's the biggest risk, or maybe the biggest opportunity in that tension? It's a complex balancing act that is absolutely going to define their future.